Hi everybody, I'm Steve McDonald and this is your Investors Daily Edge midweek market update. Well, today's positive day again. We're only going to have positive comments and good ideas that you can make money on. First up, Warren Buffett says the economy is improving, slowly but improving. A recent EU report says international goods traded in the fourth quarter were up 4.8%. Virtually every business leader says it's getting better, but the talking heads on TV who studied communications and journalism say this. Here are a couple of quotes from the Wall Street Journal and the New York Times. First quote, "A recovery may have begun," the New York Times said, "but the new economic forecast still predicts slow growth, and an upturn would mean that things are not getting better but just aren't getting worse. Washington has a lot more to do to make them better." That's the first quote. Second quote, this comes from Wall Street Journal. "Consumer confidence nosedived," the Wall Street Journal said. The conference board said respondents were more negative regarding the perception of prevailing economic conditions and their exceptions and expectations for the coming months. Now here's the problem. The first one, that was the first quote from the New York Times, was written in 1983 at the beginning of the biggest economic run we've ever seen. And the second quote from the Wall Street Journal was from 1992, and that was following a 15% nosedive in the markets just prior to a huge run-up in stock prices and spending. Now, we have always had some type of economic problems. It's the nature of the beast. The big problem is that in both of these time periods, the 80s and 90s, as now, investors were locked up by fear and were looking for the old stock market winners to resurrect. Fear, which is what the real root problem is here, cost you money, and the old winners are exactly that, old. In the early 80s, it was the steel industry and the autos that had been the huge winners for many years. Their run was over. In the early 90s, it was microprocessors and cellular technology that ran. Nobody knew what a microprocessor was, but someone did, and they made a lot of money on it. It's time to get out there again. There are good things happening. Take a look at smart grid technology. That's the first idea for this week. Our nation's electrical grid is a disaster looking for a place to happen. That's bad enough, but when you consider that 2 billion people in the world have never had electricity in their homes, but they will, and soon, and smart grid technology will deliver it. An executive from Cisco recently was quoted as saying that smart grid technology will replace the internet as theirs, Cisco's, biggest business opportunity. Take a look at ABB, symbol ABB, or Eneroc, symbol ENOC, or Itron, symbol ITRI. All were mentioned in the Wall Street Journal this weekend. All are big players in smart grid. Now, companies like Google, IBM, and Microsoft are already on board this smart grid trend. They aren't looking for the next big winner in chips, microchips, or cell phone technology. They know something you don't. Next good idea, natural gas. Natural gas has been the dog of the industry forever, but times are a-changing, as Bobby Dillon said. In the last few months, names like XOM, ExxonMobil, and BP have both jumped in with both feet in exploration and development of natural gas. You have to get in line behind these big dogs. Natural gas is cheap, and companies like Chesapeake, symbol CHK, deserve your attention. Take a look at this, Chesapeake Resources. How about the change from all gasoline cars to hybrids and all electric cars? That's our next idea. This is happening now. Even Exxon knows it and estimates they have about 10 more years of top gasoline sales. The cars of the future are powered by lithium batteries. Lithium has two sources, but most of it comes from Peru, and it's getting more and more expensive. China alone has about 500 million people who want cars, and they all will have lithium batteries in them. Do the math. The CEO for Daimler Chrysler said it best. There isn't enough oil to power all the cars the Chinese want and will buy. It has to be an electric car there. Batteries is the word. Look into it. An interesting play here in lithium is ROC, that's the symbol, Rockwood Holdings. They control a huge portion of the world's total production of lithium. Take a look at ROC. Start looking very seriously at water filtration and desalinization. It is another trend that will make tons of money in the next 10 years. Squawk Box mentioned this morning 2 companies, Paul and Carbon Calgonate. Take a look at both of them. The point is this. You continue to listen to the doomsday talking heads and you'll miss the next big run-up in stocks too. The easy thing to do is hide your head in the sand, but now is when fortunes are made by investors who look beyond CNN and CNBC and see the new trends. It isn't magic. Just use the good sense your parents taught you about money and you'll be fine. Now, the slap in the face award for this week. Goldman Sachs gets it again. Yep, twice in 1 month. This time they basically told their stockholders to go to hell when the stockholders requested a review of the bonus payouts and compensation structure. Goldman Sachs' response was, "Our pay system is fine, thank you. Now go away." Arrogance like this comes from minds clouded with their own importance. We haven't seen anything this stupid or short-sighted since the aristocracies of the 18th century in Europe. Goldman Sachs has essentially run the Treasury Department for 3 administrations, and nothing looks to be changing soon. As I said a few weeks ago, if you own Goldman Sachs stock, you deserve everything you get. But wait, there's some hope. There's talk about an investigation going on right now in the Senate that might put a few manners on Goldman Sachs. It seems they, Goldman Sachs, knowingly sold their customers investments they knew were flawed and junk and bought credit default swaps to protect themselves from a loss on them. That's fraud in anybody's book. But I've been around too long to believe this will get the attention it deserves. These cruds are too well connected. But something could happen out of this. That's it for this week. Email me your comments at the address below. I read every email and I'll respond here in the weekly update. Now, I have a webinar coming up very soon with the other IDE analysts. It's about what I call the next American tragedy, the boomer, and how they won't be able to afford to retire. There's a link below. Just click on it for more information. For everybody here at Investors Daily Edge, I'm Steve McDonald. We'll see you next week.